The other feature of the market that has been really interesting is stablecoins. Obviously, after the Genius Act, that's been good. How do you see this playing out now? And how beneficial is it to the underlying kind of value accretions of the networks?
Yeah, look, I think, to be honest, I've kind of been banging on about this for years, and it's one of the key reasons I got into crypto when, started to trade around a bit on the exchanges, started to see the frustration back in early 17. Bitcoin would have, high teens, low 20s spreads across exchanges between, say, Bitfinex and Apollyon X. That's kind of like, this is weird. Like, but and then I'll be trying to wire cash and it'd take 5 days to turn up if it turned up. And you kind of get why you've got those disparities. And then found this thing called Tether, which back then operated on the Omni blockchain. And it kind of made me super excited that the IQ behind this system is sort of super smart, that someone's worked out, let's unitize dollars and allow them to move at blockchain speeds. Now, I think Tether was like 10 to 20 million bucks at that point in time, and I actually minted some back in, I think, March 17, and sort of worked it out. And to be honest, it was one of the key reasons I committed to the space. I thought if people are coming up with such cool ideas like that, this space has got a real future. And then we see where it goes today, and it's obviously grown into kind of the behemoth of the space. And if you think about it, the ability for tethers at both a utility level for crypto, but also at a strategic level for the US, I think is quite incredible. Like, I guess we've been kind of early advocates that the ability, and I think we're kind of helped because we live in Asia and we've seen that penetration of, tether, particularly through Asia, from both the retail level up to the corporate level. We meet family-run businesses that do hundreds of millions in revenue in tether through Asia every year, right? And they're selling, building materials or traditional
furniture or whatever.
And they're taking tether, right? And I guess I think Asia's been at the forefront of that, and I guess
because they've got a lot of friction and capital controls. If you've got like a ringgit yuan cross right, it's not liquid. But if you can just do it in stable coins, you can make instant payments, dollars in, dollars out, instantly.
And they have, they're ring fenced to pretty small amounts of US dollars. They get rationed US dollars from their banks, right? And so they've got more customers that want to give them US dollars than they can finance for their traditional routes. And so it's no surprise they then turn to stable coins. And so we've been, and if you think about it, and you go down to the smaller level, if you're a Thai retail investor or user, try and open a US dollar bank account, right? Like,
it's impossible.
You're just not getting, I mean, that's even hard in Australia, right? Getting a US dollar bank account, you need to be a certain size. You got to go through a whole bunch of KMC, AML to prove and size to put to the bank that you can justify it. Now, if you've got a phone, if you've got a smartphone, you can get 10 US dollars, right? Now,
and the US has figured this out. I mean, like Scott Bessent's gone, oh, this is how we dollarize the world, and we can fund like $3 trillion of short-term notes via stablecoins.
Yeah, and that Thai investor or that Cambodian consumer that's now got $15 US on their phone, that's $15 of pure incremental demand for treasuries, which doesn't exist, right? And sounds like small dollars, but if that's the bulk of the world's population. So if you start scaling those numbers across the world's population, it looks like a pretty good sponge for some of the sovereign selling we've seen in treasuries, right? Like, it's kind of the counterpoint. It kind of surprises me that Bessent's kind of seems to be the first guy that got this. Because from our perspective, it's been that incredible kind of push into developed markets that can develop that sort of demand for US dollars that they kind of need to fund where they want to go over the next 5 to 10 years.
And also part of this is the Eurodollar markets, which have been the traditional source of funding, don't operate very well because a lot of the banks in a lot of countries are now constrained. So people can't get access to dollars. And as you said, the Eurodollar market, you can fund corporates, but you can't get individual dollars. And now it's gone to, the TAM is now 8 billion people. I mean, that's a big fucking TAM.
Yeah, and you've got, look at most reports now, 600 or 700 million people using crypto in some way. Stable coins kind of at the frontier of that. I think if I bring it back to from an investment perspective and how we see it playing into, I guess, kind of where we operate, I think one of the interesting things, and I've got a TradFi background, albeit 7 years in the past now. So like to sort of do a lot of crossover events to sort of get the temperature read on, how traditional finance views crypto and how the crypto natives view crypto. I think we're probably in a weird spot where we're probably seeing the biggest divide in that, actually, that I've ever seen in my time in crypto, with the reverse, that traditional markets, traditional investors, traditional investment banks, super excited about crypto. and the crypto native people are kind of in the doldrums and depressed. And I'd put stable coins as kind of flipping a lot of that sentiment. Stable coins from our perspective are an incredible killer use cases we've just kind of talked through, but it's also a very simple revenue generating use case. It's the sort of thing that you can take to a Goldman's commitments committee, to an IPO committee at JP Morgan or Morgan Stanley, and they can get it. They can get that that's a business model that makes a bunch of sense. And here's a use case for this thing called crypto that we've been sort of skeptical about for the last 5 to 7 years. That makes a bunch of intrinsic sense to me. And by the way, it's already making a bunch of money. So in a weird way, it's also been what I'd say is that kind of that wedge that's sort of pushed crypto into traditional finance world and has allowed it to sort of get through those barriers, has kind of stopped that crypto kind of investment case logic getting through over the last 5 or 7 years. And I attended the Goldman conference, which is a great conference every year in London in June. And, stablecoin summer was probably the most, uttered phrase throughout that. And for the first time, I think we sort of, the attendance there flipped. I think it was kind of 3/4 traditional finance, quarter crypto people. So, and stablecoins is kind of that use case that's putting crypto on the map. Now, I also think it's also one of the killer use cases for growth for on-chain, right? Like on-chain liquidity revolves around US dollars, and bringing more and more of that on-chain is a no-brainer. And we're starting to see more traditional businesses like a Robinhood, right? Like if you look at the profit margins they make on crypto versus equities, like it's chalk and cheese, right? And the extra profit they can make. So the incentives for traditional finance to bring stuff on-chain have never been stronger.
So you obviously like this video enough that you've got to the end. That's quite a big task. But listen, do me a favor, hit the like and subscribe button, and also check out what video's next, because I think you'll love it. But if you want even more, and when I'm talking more, I'm talking about member-generated ideas, incredible alpha, research, everything there to help you in your journey, just head to realvision.com/join for the best financial intelligence out there and the pure alpha that's within the platform.